Good evening, students. Welcome to the live coaching classes organized by Board of Studies ICAI. Today's evening, we are going to learn this topic called value of supply under GST law. This topic, value of supply, is very, very important from your examination point of view. And students who wanted to have your specialization under indirect taxes, this is going to be one of the crucial area once you get into practice. And today is going to be a little marathon. We are going to have detailed discussion on this topic called valuation and the corresponding rules associated with this topic called valuation. So as a routine, I would like to have a confirmation from some of you. Hope you're able to listen my audio properly, and also you're able to see my video properly. Once I have a confirmation from some of you, I'll go ahead with my discussion. Great. Thanks for the confirmation, Kaushiki. Thanks for the confirmation, Srinivasan. Thank you. So let's start with our today's discussion on this topic called valuation. Today's topic, we will understand a couple of basics why this topic called valuation is important, not only from examination point of view, from its practical application point of view. Most of you, if you have heard something called tax planning versus tax evasion, this is one area where there's a thin line of difference how a planning will be done, how a tax evasion will be undertaken. I'll take you through a couple of examples to make you understand why is that we study this topic in detail. In the process of understanding these provisions, I'll make you to learn the definitions connected with this topic called valuation. And I'll explain you all the relevant rules associated with this topic called valuation. Last, at the end of this presentation, the common issues, practical challenges we have, and what is it we are supposed to learn from examination point of view, right? So this is going to be our coverage for today's learning. Now, when we talk about this topic called valuation, that's nothing but the value. Any transaction, whenever a supply takes place, there is a value on which GST needs to be paid. Like under income tax, when we talk about taxation, what is the element of income on which tax needs to be deducted? When we talk about TDS, what is the element, what is the amount on which this TDS has to be applied? So this term valuation is nothing but a value. This is derived from a definition called consideration. Students, as I explained, please have your running notes along with you. This is more important from examination point of view. Few things, make a note along with me. So this term valuation is derived from the definition called consideration. In a short while, I'll explain what is the term consideration. Also, this term valuation under the GST law has a scope, has a place to involve or to merge within itself called something called free of supply. So valuation takes care of consideration. It also takes care of something called free supplies. Also, if there are certain expenses incurred by the supplier as a pure agent, those expenses are parked aside. I'll take you through in detail with this example called pure agent. How pure agent is applicable, what circumstances we will look into the application of deduction of expenses incurred as a pure agent. Finally, under the GST law, there are few expenses which have to be set aside from my value. So in simple term, my entire today's discussion, the 3 hours discussion, what I'm going to have with you is on this slide. So valuation is nothing but a consideration. This includes your free supplies. This may not include a pure agent. And there are few exclusions which are not to be formed part of my valuation. Now, basics to understand. When I take you through these topics, there are a few basics which we need to understand. Transaction value for purpose of payment of GST. So whenever you have done your audit, whenever you have done the GST audit per se, any transaction what you do, when you pick a particular tax invoice, the value which is mentioned on the tax invoice can be referred as my transaction value. The money received from customer may or may not agree with the transaction value. As I take you through, you'll understand what is the transaction value for the purpose of GST and what is the money consideration received from the customer. And in the process of understanding this transaction value, you need to understand something called the contractual terms of supply. What are the commercial terms for a particular contract and how the taxes have to be calculated. I'll give a very classic example when you talk about the contractual terms. I don't know how many of you have done the tax advisory or this handling income tax return for a construction contract business. Any person who is engaged into construction, who is a contractor, when he does a work or works contract for a government organizations, generally the contracts are including taxes. So whenever a particular contractor does a civil work, they say all the value of supplies is including taxes. So when I say including taxes, if the rate of tax happens to be 12%, I'll say contract value into 12 divided by 112. So this is how we need to understand the contractual terms. Then, whenever we talk about this transaction value, there is a reference to something called related party transaction. Related party transaction, the law says that, look, I cannot accept your related party transaction, that is your transaction value, for the reason there could be an influence on the price. There could be an influence on the price. Most of you would have studied income tax. There is something called transfer pricing. So even similar to transfer pricing under income tax, under customs law, there is something called SVB, special valuation bench. SVB, special valuation bench. So when the goods are imported from a related party, the transaction value is not the invoice value, rather the customs officer would try to examine, is this the price at arm's length? To examine whether the price is arm's length, there are certain additions and deductions which needs to be taken place. So here, whenever there is a transaction similar to your customs or income tax, even under GST law, they say, look, when you're dealing the transaction with a related party, we will not agree your transaction value at the face value of it. Rather, we have certain other parameters to check whether this can be acceptable or not acceptable. So when you come to the respective provision, Rule 28, you will understand how this related party transactions are evaluated. And by the way, when I talk about this related party transactions, there is a definition, like Income Tax Act, you have a definition. Even under the GST, there is a reference to Section 15, where elaborative discussion on how the transaction will be between related parties. Then, possible adjustments in transaction value. There are few adjustments which needs to be done when we do the valuation under GST law. Like when I discuss in detail Section 15, how the transaction value will be considered, what has to be added to the supply value, what need not be added to the supply value. Now, this, when I say possible adjustments, I'll give you various examples when we discuss on Section 15. Then, last but not least, on the basis of the provisions contained in Section 15, how we will travel to relevant rules and what are the principles given under Section 15 have to be kept in mind when I read each and every rule under the GST law. So students, these are the principles, or this is the basis how valuation is going to be discussed in today's class. As usual, I'll take you through a couple of examples to make the ground plan ready for you to understand the basic principles, how we apply, and what are relevant to be kept in mind. Most of you would have come across this activity called ROC, annual filing. So assuming that I'm a professional chartered accountant, I got an assignment from a client to handle the filing of ROC returns. So as a chartered accountant, when I file these ROC returns, there are various forms where some statutory fees has to be paid to the ROC. So assuming that there is a form which needs to be filed, MGT file, where a nominal amount of 300 rupees has to be paid to ROC. And once I do my filing, I'll say to the client, look, 5,000 is my professional fee. 300 rupees is what I have spent in relation to filing this particular form called MGT file. So now what matters here is what is the value of supply. So when I recover from the client, I recover 5,300. Now 300 rupees is the money I, as a chartered accountant, have spent on behalf of my client. Can we call this as a reimbursement of expenses? When I say reimbursement of expenses, the pure agent concept comes into picture. Can I apply pure agent and say 5,000 alone is my value and 300 should not be my transaction value? So what does the provision say? When we go in detail, we will understand this particular pure agent related concept. Next, this is one of the fantastic example most of the time I deal with. For a moment, most of you would have seen this shootings. When a movie, film or tele-serial shootings happen, these shootings are done in an outdoor unit. Like that, the shootings are carried out at a place where you may not have a power supply. For a moment, there is a shooting needs to be done in a deep forest where some fighting scene has to be covered. Now, this DG set is something which is relevant for power generation. Now, the DG set, what you see in the picture, this is a machine which is operated on diesel, which generates power. Now, when the service provider says, I'm going to hire you this diesel set, DG set, he says, I'm going to charge on the basis of number of hours and also the fuel cost. Now here, for a moment, if we presume that Sony Productions have hired this DG set and say Dhruti happens to be the owner of this DG set. Sony Productions says, Dhruti, I have a production for say 14 hours. And this production house says, my 14 hours may go maybe 1 or 2 hours beyond the schedule. And the service provider, Dhruti, says, okay, I'll give you the DG set, which has got a power backup. You have requested for 14 hours. I'll have a backup plan for 20 hours. So when she says this DG set is given on hire, she charges on the number of hours this DG set is used. Now here, for providing the service, Dhruti says, hourly basis I'm going to charge. Now, per hour, she takes into consideration the cost of DG set, assuming for a moment, the DG set costs 35 lakh. And when I assume this DG set stands for, say, 10,000 hours, per hour, the running operating cost, assuming 3,000 is the calculation. She says 3,000 is my running cost, plus diesel, say on an average 500 is going to be the cost, and some other Chunamunda charges 500. She says 4,000 is going to be my charges per hour to the customer called Sony Productions. Now what matters here is what should be the value of supply? Is it the 3,000 rupees the DG set cost? Is it 500 rupees the diesel required to operate the cost? Is it that 500 rupees the ancillary overheads required to operate this particular DG set? Now, assuming for per hour, I say 4,000 rupees is my operating cost. What shall be my value of supply? Now, the important element comes here, students. Diesel. Diesel, as you are all aware, it's a non-taxable supply. When you read section 9, it says that petrol, diesel, and the other petroleum related products are kept, petrol and diesel are kept outside the limit of GST. So when there is no levy, how do I take into consideration this diesel, which is nothing but operating cost of my DG set? Also, when I do the valuation, how is that I have to measure for the purpose of levy? Like a DG set is say taxed at the rate of 28%. The operating service cost is at 18%. Diesel is non-GST supply. So when I talk about these examples, make a note in your working notes, section 8 hyphen, section 8 hyphen composite supply. Section 8 hyphen composite supply. Across your GST discussions, this term composite supply is going to be very, very relevant. Reason, there is one small 2 marks question which will be tested maybe under valuation, which will be tested maybe under any other ancillary topic. So applying the principles of composite supply, 4,000 is going to be the value of supply for the purpose of levy of GST. Example number 3. Most of you who would have done this audit of the jewelry business, you would have come across this example. Assuming that there is a jewelry shop owner, this jewelry shop owner has a customer. When a customer wants to purchase an item, this customer says, like said, the cost of this ornament is 10 lakhs. So when he wanted to purchase this ornament for 10 lakhs, the customer says, sir, I have my ancestral jewelry, which is old. I give the jewelry as an exchange and balance I'll pay in cash. So the ornament which the shop owner is selling is worth 10 lakhs. Customer comes with a old used jewelry. That ornament which is brought in by the customer, for a moment, it's costing say 6 lakhs. So customer says, so I'm going to pay you 4 lakhs. I'll give you jewelry in exchange for 6 lakhs. Now, when you look at the cash for that particular month, my tax invoice, assuming only this sale is there, 10 lakhs is going to be my tax invoice. When you look at your bank statement, my bank statement has got only 4 lakhs. Now, what happened to the balance 6 lakhs? I've got an ornament in exchange. So here, consideration is not completely in money. Consideration is in kind. Consideration is in a kind of, not barter. It is an exchange of an ornament, which is old and used aspect. So here, can the supplier, the shop owner, do a swapping system saying that I'll cut a bill only for 4 lakhs. Reason you're giving me cash, maybe you have swiped your card for 4 lakhs. I'll prepare a payment, I'll prepare an ornament saying that this is what so and so. Can that be acceptable? What shall be the value of supply? Is it entire 10 lakhs or is it only that 4 lakhs where money was, cash was received in money, not in other fashion? So here, learning from this example, this is one of the example I'm talking to you. I don't know how many of you have had clients where you have experienced this particular business model. There are, we call this people called karigari. Karigari are the people who, goldsmith, who prepare the ornaments on behalf of the shop. Most of this goldsmith, the business operates like this. They get 100 grams of bullion, that's 100 grams, this 24 carats gold or 22 carats, this cake. The gold cake comes as a cake to the goldsmith. What does the goldsmith do? He makes the ornament as per the design given by the shop owner. So he gives back the, there are certain calculations, weighment, the stones, the artmanship, all other aspects. So here, the goldsmith never gets a cash. He gets 100 grams of biscuit. He gives back an ornament weighing 100 grams. Now, what is the profit goldsmith is going to have? In the process, maybe 5 grams is what which gets retained with the goldsmith. That's his consideration. Now, when you look at his bank statement, always there is no money rotating in bank statement. How do I do the valuation? How do I evaluate those kind of transactions? Now, this is one gray area where recently there was a recent amendment under the 47th GST Council where government has brought in the principle called e-way bill for imitation jewelry. And for your kind information, for jewelry, there is no e-way bill requirement. And this is one business where it is very, very tough to monitor the movement of jewelry. And for the first time, the recent council, there was a no recommendation made. Imitation jewelry evable is required, right? So this is one example I'll explain in the process of our discussion. So as usual, like examples, first example, agent. When I talk about this term called agent, please keep in mind the first example I spoke to you, which is nothing but this ROC filing phase. I filed a form called MGT5 where I have received 300 rupees as a reinvestment. Now, agent means a person who is including a factor, broker, commission agent, arrangor, delivery agent, auctioneer, or any mercantile agent by whatever name called, who carries on the business of supply of goods or services on behalf of another. Now here, as a chartered accountant, I'm not a representative. I'm not an agent. I'm not a broker. I have done my independent services. So here, if I have to call myself as an agent, there is a business, there is a supply. The activity of business, which is defined under section 2, clause 17, should involve a supply. This supply may be for goods, maybe services, not on account, on his own account. This is on account of another person. Another person. For a moment, let's take example of Ultratech Cement. Ultratech Cement cannot sell cement on its own across India. Ultratech Cement has got distributors or agents across India who sells the cement. Ultratech Cement says to every dealer, look, the MRP is 600 rupees. You have to sell at 550 rupees. Between 550 to 600, you can play around, but I fix minimum price of 550. So when a shop owner sells cements, that particular money which he derives is nothing but an agency, or he's an agent, and he draws commission from that particular Ultratech Cement. Moving on, the very, very key important point for discussion is consideration. I'll give you a simple example before I explain the concept of consideration. As you're all in the final stage, you have to have certain basic calculations. Hope you are able to see my Excel file. There are a few basic things which you should have expertise to deal with. Say there is a construction activity. In the construction activity, there is a builder, there is a client. Builder, Mrs. XYZ and Co. And the client happens to be, say, Mrs. Amma Ashrama. There's a Ashrama which is registered under Section 12AA of Income Tax Act. This ashrama is registered under Section 12A of Income Tax Act, where they get donations which are not subjected to income tax. Now, builder gets a contract from this particular client saying that please do a construction activity of a ashrama. Construction of ashrama for old age people. This construction, assuming this is say 10,000 square feet. 10,000 square feet. And this construction activity, for a moment, let's assume material plus labor. Now, here, this client, Amma Ashma, says, look, you as a builder, entire material, entire labor is to your account. Now, this is a contract. The contract says that you have been appointed as a principal contractor. All construction activity for 10,000 square feet has to be done by you. And as for the contract, price per square feet is say rupees 2000 is a agreed upon price. So when contract was signed, the contract says that 2000 is going to be the per square feet consideration. Like this builder XYZ Info, he gets the material, he gets the labor, and he does the architect design, everything end to end. The work started, contract has been executed. End of the contract, I'll put the contract value for you. 10,000 square feet into 2,000 per square feet. This is going to be my construction cost. Now, it's going to be 200 lakh. That means it's going to be, say, 2 crore worth construction. Actual money received. Say, the contractor has actually received 95% of this value, or say 90% of this value. Now, contractor has got a approval from the client. Contractor said, I have also completed my work. My actual receivable is 2 crore, but received in bank only 1 crore 80 lakhs. What happened? In the process of construction activity, this client, Ashma says, look, I have a donor called, say, India Cements Limited, who are into manufacturing of cement. So this donor who wanted to give donation to this organization, this donor has given a free supplies of cement. Now, this is one of the example I'm bringing to your knowledge. Now, this is how your entire valuation is rooted on the basis of definition called consideration. So entire discussion, my actual value, contract value is 2 crore, but money received from the client is 1 crore 80 lakhs. Was there a damage, that is LD? Was there any liquidated damage? Answer is no. Was there any change in plan? Answer is no. But why that the builder has agreed only for 1 crore 80? Answer is, the client says, this Ashma says that I have a donor who says was come forward to give 20 lakhs worth cement for construction activity. Now here, the builder is responsible for construction of 2 crore, but he got 20 lakh worth material, that is cement, by this client. On the basis of this example, I'll come back to my definition to make you understand this term called consideration. When you talk about consideration in relation to supply of goods or services, it means that any payment which is made or to be made, whether in money or otherwise, which is paid in money or otherwise. You remember this jewelry example I gave you? There's a jewelry shop. Customer walks in with his old jewelry. So customer says, sir, I have an old ornament whose market value as ascertained by the shop owner is 6 lakhs. And what is the money he's going to give for the exchange of ornament? 4 lakhs. So here, when you talk about consideration, my consideration is nothing but money or otherwise. So I can have my consideration in terms of money or otherwise. I can receive in physical money form. Now there is a definition for money under GST law where it says money includes all your currency, which is recognized by our Reserve Bank of India, which also includes your foreign currency, which is a legal tender for acceptance, or LC, bank guarantee, or your any other negotiable instrument where the instrument is recognized by the Negotiable Instrument Act. All that forms part of my money. So consideration is having money or otherwise. So this is a starting point which we have to include in response to the supply, whether paid by the recipient or any other person. Now look at this definition. In the example I gave you a while back, India Cements have given this cement. So this consideration is not given by this Amma Ashrama. This is given by this agency called India Cements. But it shall not include subsidy. So the valuation says that in case if you get a subsidy either from a central government or state government, please don't form part of my consideration. Element number 2. The monetary value, what I talked about in respect of in relation to the above supply may include the value which is represented in the form of an act or forbearance. This monetary value may be in terms of money, may be in terms of an act or forbearance. Like the example I gave to you, I may get an India Cements, that is the goods, or this client called Amma Ashrama may say, look, you have to hire an engineer who has to be paid 10 lakhs. Instead of you paying the 10 lakhs, I will pay directly from my account. So whatever consideration, instead of supplier paying to the end party, the recipient pays to that particular party, act or forbearance, which is done by the recipient, that also shall part of my consideration. Again, as per about the term, if there is any subsidy, this does not form part of my consideration. So this is what relevant for my consideration. In the part of explaining this term consideration, very important element, deposits. If there is any money received by way of a deposit, which is refundable on account of contractual agreement, this deposit shall not form part of my consideration unless I do the appropriation of this deposit for my supply. Example for this last paragraph, the provision, whenever I have a rental agreement, I will say every month my tenant has to pay me 1 lakh as a rent. In the process of this agreement, for 5 months, 5 into 1 lakh, 5 lakhs, the tenant has to make a no interest-free deposit of 5 lakhs. So when the landlord gets a deposit of 5 lakhs, that shall not be called as a consideration by virtue of this definition, section 2, clause 31. Please make a note in your working notes. Consideration is equal to money or otherwise plus monetary value as an act or forbearance, monetary value as an act or forbearance, less deposit refundable, right? So this is how you will understand your term called consideration. You remember, students, the first slide which I have started with, my valuation is nothing but consideration. Consideration I have explained through various examples. Now moving on to next aspect called market value. This market value, make a note, market value hyphen related party transaction hyphen transfer pricing provisions plus SVB under customs law, SVB, special valuation bench under customs law. Now, why I'm giving this example? Whenever I talk about a related party transaction, the way the transfer pricing looks for arm's length. When you write arm's length, you can transfer pricing, you can mention arm's length price. There are various methods. When you read your income tax, you will study this transfer pricing. So here, whenever I talk about market value, wherever we talk about related party transaction, in 15 to 30 minutes, I'll explain you what is a related party transaction. So whenever I talk about related party transaction, this term market value comes into picture for evaluating the value. So here the definition says that market value is nothing but the full amount which a recipient of supply is required to pay in order to obtain the goods and services or both of like kind and quality, like kind and quality, at or about the same time and at the same commercial level, where recipient and supply are not related. So here, when I refer to market value, the tax officer is looking at your arm's length transaction. What is the independent buyer is paying for that particular supply? Like one example I'll give you. I don't know how many of you have come across this fiat case law, fiat judgment. Fiat, when it came into India for the first time, Fiat was a competitor for Maruti. Fiat was a competitor for Maruti. So Fiat Germany from England, when they have imported the car, they have supplied the goods at a lower price than their landed price. For a moment, assuming the landed price is 5 lakhs, to kill the competition, like Maruti used to play monopoly at that point in time. Fiat used to sell the cars less than the landed price of 5 lakhs. That point in time, they say they have evaluated this market value, saying that if this car was sold to an independent buyer at that point in time, to a, if not the same car, maybe a different brand. When they say like kind and quality, like we have Maruti i20, Maruti i10, sorry, not Maruti, Honda i20, i10, etc. If there are variants, if there is any change in the variant, that is called as like kind and quality. Can you compare that to an independent customer? If this value to an independent customer matches, I'll accept that as your market value. This is your third definition. Money, as I explained to you, money includes all these modes. That is your Indian legal tender, foreign currency, check, promissory note, bill of exchange, LC, draft, pay order, traveler's check, money order, etc. All these forms part of my money. Examination, true or false. One aspect which is tested is money or currency held at numismatic value. Now, this is not considered as money. Example, you might be holding, say, old, probably 1,000 rupee note. Like for a moment, we have, after this note bandi, 1,000 rupee note was banned in India. Only the legal tender as on today is 500 rupees and 2,000 rupees. So numismatic value is nothing but I have a hobby of collecting old currency, like 10 paisa, 1 paisa, anna, all those old currencies which are not in vogue. If I'm holding that at its numismatic value, that is, it's a old currency held as a hobby, that does not form part of my money definition. Examination, true or false. Money collected for hobby purpose, which is not a legal tender, can be called as money. Answer is false. It's not a money. Now, moving on to the crux of today's discussion. Section 15 is the testing provision where they'll say how your transaction value can be accepted. There are 5 subsections. First subsection says whatever is a value available on an invoice, can it be called as a transaction value? My subsection 1 examines when a value can be accepted as transaction value. If you get your acceptance for transaction value, nothing to bother, nothing to travel to rules, straight away you can go with the transaction value. So the starting point is transaction value. Point number 2. In the process of examining the transaction value, this section 15 has given a guidance called subsection 2, where it says there are certain inclusions, there are 5 elements which should form part and parcel of your transaction value. I'll take you through the examples when I come to the subsection 2. Subsection 3, very important. Now, examination point of view, you may have a 4 marks question, where there will be a 1 mark adjustment on computation of discount. There will be 2 marks on account of your value. Then finally, there will be 1 mark for the purpose of your computation of the GST, inclusive or exclusive basis. Applying your section 8, composite supply vis-a-vis mixed supply. So students, examination, when you look at this valuation, I repeat once again, Any problem you look at this transaction value or valuation, generally adjustments will have 2 marks from subsection 2. Adjustment will have 1 mark on account of discount calculation. And finally, 1 mark for computation of the GST payable on account of the rates given. Like example, say the value of goods supplied is your carton boxes. Now, carton boxes, your packing boxes. Most of this hotel, if you see the food which gets packed, you may have this plastic boxes or the paper boxes. So this carton boxes, if supplied, which has a rate of tax 12%, it has a transportation. The rate of GST for transportation is say 18% or say 12%. There is an insurance. The cost of insurance is 18%. When there are various supplies, evaluation of composite supply as per section 8 and computation of GST. 1 mark is the weightage. I'll take you one problem after I discuss these 5 subsections. Then subsection 4, way I travel to valuation rules. Valuation rules. There are 11 valuation rules where if I fail to get an answer, the transaction value is not acceptable because probably it could be a related party transaction, or because my transaction value is not only in money, or there are certain adjustments which needs a special attention. There are special transactions where government has notified what should be the value of supply. When I travel to subsection 5, there are few services where the government has prescribed this is going to be the value of supply. Don't question. It's a policy matter. Like example, when we talk about your travel agent, when a travel agent does a ticket booking, I don't know how many of you have done this audit of a software company. When you do audit of a software company, they have this tour and travel expenses. Most of the tour and travel, they have a travel agent. So when a ticket is booked through travel agent, assuming the cost of ticket is 10,000, the travel agent is not going to charge his GST of 18% on entire 10,000. There's a valuation. Rule 32 gives the mechanism how to calculate the value. So in your working note, you can make a note. Section 15, under that, transaction value defined or prescribed as per subsection 1. What elements of supply needs to be included is defined under subsection 2. What needs to be excluded, that is on account of discount, is defined under subsection 3. What if there is a failure under subsection 1? How I will travel to valuation rules is prescribed under subsection 4. Finally, government has the authority to define what are the values for certain identified or notified supplies. This is the entire crux of your section 15. Right from now, I'll take 15 minutes more or less to explain you in detail this section 15. Based on that, we will travel to valuation rules. Please follow with me carefully. Don't miss this discussion. End of this, I'll take you through one problem. 4 marks, please expect a question from this particular chapter. Subsection 1. This section 15 says that the value of supply of goods or services, or both, shall be the transaction value. Shall be the transaction value. When, which is the price actually paid or payable. So I'll take this transaction value where the price is money paid or payable for the said supply of goods or services or both, where supplier and recipient of the supply are not related. So first condition they are saying that I will accept your transaction value where the supplier and recipient are not related. And second condition, price is a sole consideration. Price is a sole consideration. When a transaction takes place, whatever money is received, that is the sole consideration. I'll give an example. Now, all these examples are relevant. Most of us doesn't even know, if you don't know the law, how you will conduct an audit. You like no, this gives a clarity that you don't know that audit can be done in this manner. I'll give an example of say this household goods, a shop which deals with this household goods. Uh, imagine a shop which sells television, refrigerator, washing machine, mixie grinder, or a fan. These shops which are into sale of electronic consumable goods, imagine that business for a while. The moment when you go into the shop, there is something called inventory. When you take the inventory records, when you look at the security register, you'll understand the business model. If the security register says, sir, this is the inventory register for the new stock, and this is the inventory register for the old exchanged goods, consumable goods. I repeat my example. When we examine the inventory registers, there will be one register for the brand new items which are there for sale. There is a second register which is called old used consumable goods received from the customer. Now, why old used consumable goods? Most of these shops, they have a business promotion. What they say? So you get your old used mixie grinder. Cost of new mixie grinder is 5,000 rupees. If you get your old mixie grinder, whichever be the condition, it may be functioning, it may not be functioning, I will exchange it for sum of 300 rupees. So 5,000 is the brand new value. You pay me cash of 4,700. You give your old used mixie grinder whose market value is 300. Now here, is the price sole consideration? When you look at the business model, only then you can say whether price is a sole consideration. Is this point clear, everyone? 15 subsection 1, transaction value. 15 subsection 1, transaction value. Let me see if there are any questions so far. So far, so good. No questions. Great. So here, when we talk about this transaction value, please understand the business model. See whether I have satisfied these conditions. Now, what is a transaction value? Value I have quoted for the supply. Supplier and recipient are not related. Price is the sole consideration. Now, examination. Look at the given question. Money received for the supply. Is it money alone or is there anything else in exchange? If something else is there in exchange, then I will not go with subsection 1. There is something called Rule 27. Please make a note. Rule 27. Rule 27. So whenever you don't have price as a sole consideration, I fail to apply section 15 subsection 1. I'll apply Rule 27. Please make a note in your working note. Moving on from here. I was talking about the previous slide, related party transaction. Now I'll explain this relationship, how it is going to influence the transaction value. I have made this entire list under section 15. If you have institute material next to you, you have list of parties which is called as a related party transaction. I've clubbed these related party transactions into 3 buckets. First bucket called blood relation. When I talk about a related party transaction, influenced by blood relation. Sale of goods by a brother to sister, sister to another sibling, or son to father, son to brother-in-law, all these blood relation, whether there was an influence. Sir, how do you check this blood relation? Practically impossible. In a business, B2C transactions, if there is a price variation, we will say, Jameen Asman ka farak. Like one instance, I don't know how many of you have heard this term called artificial intelligence, AI, machine learning, artificial intelligence, machine learning. If you have used MS Excel, people who are tech savvy, people are very good in audit, they download the data, all these B2C transactions. When you download the business transactions, For a moment, you will take a dump of data, say it's from this shop owner who sells this who sells this electronic goods. Say if you have to analyze sale of televisions, when I do a run of sale of televisions report, I have TV, say Sony, Samsung, LG, etc. Brand wise, I'll have. Then size wise, size 1, size 2, size 3. Now, when I analyze size 1, assuming for a moment, in a particular month, there are 10 TVs sold. The average price of 10 TVs is, say, 9,500. 9 cases, the TV was sold for 10,000. One case, this TV was sold for 8,000. I repeat, out of 10 instances, 9 instances, my selling price was 10,000. One instance, the selling price was 8,000. Now you will pick that 8,000 instance. And if you ask, so why is that all the cases you have given 10,000, this case you have sold it for 8,000? He will say, sir, I have given a discount. Now you may trust, you may not trust. You may rely upon, you may not rely upon. If you have given a discount, why was the discount not given to 9 customers? Sir, I don't want to give. Now it's a business. Whatever be the explanation. If there is a blood relation, because of blood relation, the discount was given to the extent of 2,000, then I'll not accept your section 15, subsection 1. Transaction value is not acceptable. Why? There was a compromise on my supply value. Second bucket called artificial bonding between the persons. My relationship was disturbed because of my artificial bonding. For a moment, employer-employee relationship. I'll give an example. Microsoft or Dell comes with an annual sale scheme. Microsoft says the license cost of Microsoft for home user edition is 7,000 rupees. In case if employee wants to buy this home edition Microsoft license, instead of 7,000 rupees, I'll give it at 50%, that is 3,500. Now, what happened here? Relationship, artificial employer-employee relationship has disturbed my transaction value. Now, government is not getting revenue on entire 7,000. They're getting revenue on 3,500 only. Again, section 15, subsection 1, I'll set aside my transaction value. In case of this relationship, wherever related party transactions say, I have to go to valuation rules. Third case, there is excesses of control over another. Like most of you would have studied your Companies Act, holding company, sister company, or your subsidy, associated enterprises, where 2 or 3 companies have one common holding company. We call it as your segment reporting, consolidated financial statements, where I consolidate all my subsidiaries with the main holding company. So those control which is exercised is my third bucket. So if you analyze this particular 3 buckets, first bucket, blood relation. Second bucket is your artificial bonding. So my artificial bonding is on account of partnership. One person is partner in another business, like individual partners, or one firm is becoming a partnership in another firm, a company becoming a partner in another firm. So because of this partnership relation, that's called artificial relationship, my price was influenced. Third, employer-employee, I give an example of Microsoft. Such persons are officers or directors, like managing director, executive director, the full-time executive. These officers who have an influence on my transaction value. Third relationship, exercise of control by virtue of one person directly or indirectly own, control, or hold 25% or more. Examination, wait and watch for one MCQ on the basis of this slide. Please wait and watch MCQs in your examination. 1 mark question will be on the basis of related party transaction evaluation on this slide. So here they say there's a holding of 25% or more of outstanding voting stock. So if there is an equity, assuming 10,000 are the outstanding shares, if one person is holding either 2,500 shares or more than 2,500 shares, then there is an influence of relationship. Like one example, say there is a company called XYZ Private Limited has invested 20% of money in the shares of, say, Tata Group. Now, when Tata Group sells the goods to this company called XYZ Private Limited, we may not say there is a control. Reason? This definition says 25% or more, 25% or more is required to say there is an influence. So if the share outstanding voting stock, if the value is less than 25%, then I cannot say that there is a control. Point number 2. One of them directly or indirectly controls the other. Now, what do we mean by control? Holding company controlling the sister company. So when there is a foreign entity who holds completely the subsidiary. So any transactions between holding company and sister company can be called as a control. Third, both of them are controlled directly or indirectly by a third person. For a moment, I'm an entity in India. I export goods to an entity in Singapore. Entity in Singapore is a different entity. Entity in India is a different entity. This Singapore client and this Indian entity both have the master entity in Japan. So if there is a third person in Japan who controls the entity in Singapore, who also controls entity in India, but virtue of this associated enterprise relationship, again, that's called as a related party transaction. Also, together, they directly or indirectly control a third person. So this controlship can be direct, could be indirect. Any of these circumstances, I will say there is an influence on my related party transaction or impact on my transaction value. Examination 1 mark MCQ on related party transaction. Moving on. So when I talk about subsection 1, this is abstract from your institute material. Examination, please have this kind of running notes before your exam. As you attend these classes, as you prepare, please make a running notes. When I talk about transaction value, it is a supply between unrelated parties and price is the sole consideration. Then on the face of it, I accept that as a transaction value. Sir, how do I know? That price is not a sole consideration? I give an example. Please understand the business model. Please examine how the money comes into the business. Again, for benefit of other students who have joined late, one business model, I was talking about jewelry business. Price is not sole consideration. When I sell an ornament for 10 lakhs, I don't get entire 10 lakhs. I get money for 4 lakhs. Balance 6 lakhs comes as a in kind. I don't go with transaction value, that is 4 lakhs. I go with my rule 27. Example number 2. Sale of an old mixie grinder. The mixie grinder, I get a cash of 2,700. I also get an old grinder of 300 rupees. I don't say price is the sole consideration. This is my explanation for 15.1. Moving further, which should form part of my supply value. I repeat. When you look at your transaction value, you may get a question. You may get you may have a question that should I consider this part of my transaction value? I'll give an example. If you look at this security agency, when a security agency raises a bill on a company, security agency says that, sir, during a particular month, I have deployed 35 people at your factory. The salary cost of these 35 guards, supervisors is say 10 lakhs. For these security people, I have to pay EPF, I have to pay ESI. I have paid EPF and ESI, say to the tune of 2 lakhs. Now, I need to recover 10 lakhs. I also need to recover 2 lakhs. Now, in addition to that, the security agency says, sir, I have given a uniform. You have given, you have guided me that all the security should have a uniform. So I have purchased and given a uniform. Along with uniform, say you have said that this particular brand shoes have to be given. I have purchased and given that particular brand shoes. Should I add back 10 to 10 lakhs, this EPF and ESI 2 lakhs? Should I add back, say, cost of uniform 1.5 lakh, again to 10 lakhs? So when I look at my transaction value, I spoke about EPF and ESI. EPF and ESI is a statutory levy by the central government. So can GST be levied on some other duties, some other taxes? The answer comes in this particular section 15, subsection 2. So this section, subsection 2 says that when I look at transaction value, there are 5 elements which needs to be considered. First, whatever duties and taxes are levied in relation to that supply, other than IGST, CGST, SGST, please add back to your transaction value. Second, if there are any expenses to be incurred by the supplier for that supply, but that expenses were made by the recipient, I repeat, the responsibility of the supplier was fulfilled, was satisfied by the recipient, that also needs to be added back to my transaction value. The third element, incidental expenses. In the course of supply of goods, in the course of supply of services, if there are any incidental expenses, I'll give an example. Say, I'm a clearinghouse agent. Most of you who have not dealt with customs provisions, an importer appoints an agent called CHA, clearinghouse agent. So what does the CHA do? He goes to the customs port. He gets the material unloaded. Once the material comes to the dock, from there is something called inspection. He gets the preliminary inspection. He gets assessment report and also valuation report. Post the valuation, he arranges someone called transporter. And this transporter, he loads the material into that particular vehicle. CHA gets the insurance done for that particular consignment. And once the material reaches the factory, the CHA raises his bill. Now, in the part of this service, CHA says, sir, I have incurred 300 rupees as bank charges. Why is that 300 rupees? Sir, when I pay customs duty, I have to take a demand draft. So I have purchased a demand draft. I have spent 250 rupees for that. When I have done the inspection charges, there is a bank processing charges. I have to buy a bond, which is worth 50 rupees. So 300 is my incidental expenses. Also, in the part of this coordination, I have spent something called hotel expenses. The consignment came at late night 3 o'clock. My agent was there from evening 6 p.m. till early morning 3 o'clock. The surveyor came only in the morning 5 o'clock. There are hotel expenses near to the this customs port. So any incidental expenses, they say, please add back to your transaction value. I repeat, expenses in relation to your supply. The third element, the fourth element, late fee or interest. When you talk about transaction value, when you talk about supply, any expenses recovered because of delaying consideration, delaying receipt from the customer, if I recover by way of late fee, interest, or fine, that also forms part of my transaction value. Last but not least, subsidies. The transaction value, they say, if there is a subsidy given for the supply, other than subsidy given by state government, central government, please add back to your transaction value. I'll come to my Excel file. Examination, 4 marks, 380 question. On the out of 4 marks, 2 marks is the adjustment on the basis of this slide, what we are going to discuss now. Section 15, subsection 2, transaction value include. So for this, I'll give you a couple of examples to make you understand. Particulars, I'll say amount here, and I'll say include or exclude. I'll say serial number also for ease of understanding. First, customs duty paid customs duty paid on behalf of importer. So I paid 2,80,000 as customs duty. Then, second, for a moment, OCTRA is not there. Say state taxes for infrastructure development. So this agent has paid some 12,000 as state taxes, which is collected by a particular state for their infrastructure development. Third, CHA fees. Say he charges 2,85,000 as his fees. Fourth, hotel, then travel, then food, then miscellaneous. Say he spends around 28,500. Next, we have something called transportation. So transportation of, I'll say transportation plus insurance. 45,000. Now, here, service provider, I'll say example number 1, service provider. Services rendered by CHA. CHA is a person who is a clearinghouse agent who takes care of getting the consignment cleared from the customs till the material reaches the factory, assuming he is responsible for the services. Now, question number 1, customs duty paid on behalf of importer. Now, this customs duty, please wait for the explanation which is in relation to pure agent. Pure agent. For a moment, I'll say exclude. Now, there is a definition called pure agent. Rule 33 is explaining this term, this concept called pure agent. Any money paid on behalf of the ultimate service recipient that does not form part of my transaction value. State taxes, infrastructure development. Now, when I'm getting the consignment cleared, for a moment, say Jharkhand state says any consignment which it's a transit consignment from one state to another state, the vehicle has to pass through, say, Jharkhand. The state of Jharkhand says 12,000 rupees you have to pay as a infrastructure development fee. Now, it's a money paid to the state of Jharkhand. By applying the principles of 15 subsection 2, duties and taxes, taxes to be included. So answer, when I talk about my transaction value, this has to be included for my value of supply. CHA fees, 2,85,000. This is a main fee, which is service rendered by CHA. So this has to be included for value of supply. Then hotel, travel, food. Now this is incidental or ancillary expenses. These are essential. These are necessary for rendering my CHA services. So again, I'll say please include that for value of supply. Transportation plus insurance. Now, look at the nature of contract. If the service provider, that is CHA, says, I will act as your agent, whatever actuals are there, then pure agent, please exclude. Pure agent, please exclude. If this importer says, no, it is not as a reimbursement, it is on your account, then it has to be included. To be included if the contract is specific for this service. So on the basis of contractual terms, I have to see whether this has to be included or excluded. So for a moment, let's assume that the contract is on a pure agent basis. So value of supply as per section 15, subsection 2. My value of supply, I will not take pure agent. As we have discussed, the customs duty is not to be included. I'll take state taxes plus 2,85,000 is my service fee, which is clearinghouse agent fees. Also, I'll take into consideration 28,500, which is incidental expenses, and I'll not take into consideration this transport plus insurance because I'm acting as a pure agent. My value of supply happens to be 3,25,500. Remember, examination. Please do this calculation. When you include, exclude, give a reason in the answer why this value is considered, why this value is not considered. So this is my value as per section 15 subsection 2. Before I go to another example under this 15 subsection 2, let me know if you have any doubts so far. Kaushiki, what is the 2 INC? I have not understood that one. Okay, so far so good. There are no questions on the discussions what we had. I'll continue with example number 2. Let me just copy the headings. Example number 2. Sale of agricultural equipment. Sale of agricultural equipment. Sale number 1. Sale value of machinery. Say 12,85,000. Value of machinery 12,85,000. Then I have transport, insurance, say 28,500. Then I have packing charges. So packing charges is 45,000. Fourth, I have late fee recover for delay in payment. The late fee I have on the basic value, assuming 1% is my late fee, 12,850. Then subsidy given by state government, say 2,50,000. Now, these are the details available from the books of accounts. Now, I'll give you this subsidy, the background, and then I'll explain this example. Most of these suppliers who have to supply the goods where the central government or state government says that this, I'll give you a subsidy. I'll give an example. Say there is take example of Telangana state. In Telangana state, they have this solar power projects where the government of Telangana says every residence where they have this solar panels installed on their roof, which can produce say a power up to say 1 megawatt or maybe some some particular parameters met. Then they say every instrument you purchase 5,000 is a subsidy given. So here what the seller will do, assuming the original cost of this solar equipment is 1 lakh, they collect 95,000 from the customer, balance 5,000 rupees. They'll say, sir, I have done the installation at so and so customer place. This is the acceptance letter of the customer. Along with the bill, they attach the electricity bill, and that bill goes to the state government. So the treasury of the state government, on the basis of the bill, on the basis of the electricity bill of the customer, they will release 5,000 directly to the seller. That is example where subsidy is received by a state government or central government. And when you happen to do the audit of this nature, first and foremost, whenever you do audit, please study the business. When I say study the business, ask the basic questions. What is your nature of business? How do you receive money? Are there any related party transactions? Are there any money received by way of a government grant? Are there money received by way of a grant? May not be from government, maybe from a private party. I'll give another example. Say this Tamil Nadu. In Tamil Nadu, there is one software company where they have adopted a particular village where they say any person, any student who purchases a laptop from a particular shop, they say, please give 50% discount to a student. Student who is pursuing their education up to say graduation, if they buy an electronic device for their education purpose, 50% we will contribute. So if the cost of the laptop is 50,000, 25,000 will be paid by the student, 25,000 is paid by the software company. Examine the business model where are they receiving any of these aspects, how the money inflow is happening. Please understand, please run through the bank statement. Coming back to this problem, value of machinery. This is one of the value of supply. Money is going to be paid from the customer, included for value of supply. Transport and insurance. Now, transport and insurance are incidental or essential services. Without transporting the machinery, without paying insurance, the machinery does not reach to the place of the customer. Your accounting standard 10 PPE, capitalization of plant and equipments, where any expenses incidental or ancillary that needs to be added for value of supply. Again, 15 subsection 2, incidental expenses have to add it back. Again, reason for that, incidental expense. Then packing charges. This is again relevant for me. I'll also say incidental expenses. Please add back for value of supply. Late fee recovered for delay in payment. I say if you make the payment within 30 days, I'll give you a discount, or I have given a credit period of 30 days. Customer has not paid money within 30 days. I have levied a late fee called 12,850. Again, this to be included for the purpose of value of supply. Now, generally, whenever we talk about late fee and all, customers will pay only late fee. On top of it, they may not pay GST. So here I'll say included for value of supply, valuation on inclusive basis. Means customer is not willing to pay 18% GST on 12,850. Moving on further, subsidy by state government. If you look at the definition of consideration, if you look at section 15 subsection 2, they say any subsidies, please add to your value of supply, barring subsidy from a central government or state government. So here you will say exclude from value of supply. Now, these are my remarks for value of supply. So here, when I do the calculation, before that, I'll also give you something called rate of tax. Assuming this rate of tax is 12% for the machinery, transportation insurance 18%, parking charges, assuming it is again 12%, late fee it is 18%, subsidy given by the government, it has no rate. Now, this is an example. This is an example where evaluation of value of supply, various rate of taxes are there, and computation of value of supply. So here, first I'll say value of supply for section 15, subsection 2. I'll say 12,85,000 plus transport and insurance relevant, parking charges also relevant, late fee. This I'll deal separately. Late fee is the money, like if you happen to remember section 12, which deals with your time of supply, there is a clarity under section 12, subsection 4. Any money recovered by way of late fee or fine, the day when you receive that money, that will be the time of supply. So if for a moment, when I prepare an invoice, I don't know the money is going to come or not. So this is going to be my value of supply. This is going to be the value of supply at the time of invoice preparation. Are you clear with this? I have not taken late fee. Reason, at the time when I prepare my invoice, I gave a credit period of 30 days. So on the day I prepared my invoice, point number 4 will not be taken into consideration. Now, I know value of supply, GST, assuming it is a interstate supply at the rate of 12%. Why 12%? Composite supply of machinery. So here you will say that this is a transaction where my machinery is the principal supply. My machinery is a principal supply. As per section A, when there are various elements of supply, look at the principal supply. That principal supply is the main supply, which will be considered for my calculation of rate of tax. So here, my GST is going to be on 13,58,000, 12% is going to be GST, 1,63,020. So I'll repeat once again for your understanding purpose. Valuation under 15.2, value of machinery I have taken, transport and insurance relevant I have taken, parking charges essential I have taken, late fee I have not taken, subsidy again given by state government I have not taken. So once I consider all these rates, for consideration, among the given rates available, if the value of machinery, which happens to be a principal supply, is taxed at 12%, my rate of GST is going to be 12%. On whole, I'm going to say 12%. Moving on, assuming the customer has paid this late fee at a later point in time. Value of supply for late fee on inclusive basis. That means customer says, sir, I'm willing to pay 12,850. I cannot afford to pay 18% on that. Generally, this is the practice. So here, 12,850 into 100 divided by 118. Look at this carefully. What am I doing? 12,850 as per section 15, subsection 2. Any money recovered from a recipient on account of late fee, interest, penalty, or any other nomenclature also forms part of value of supply. So here, 12,850 forms part of supply. What is the rate? 18%. Since the customer is not willing to pay GST extra, I'll put the denominator 118. I'll put the numerator 100 rupees. 100. So this is going to be my value of supply, 10,890. GST 18%. Let's say on this. Here, this is a independent supply. This is not a composite supply. When I have made the machinery, all packing material transportation is a composite supply. This has come as an independent supply at a later point in time. For that reason, I'll say on this 18% is my GST. 1,960. If I add these two, I'm going to get a total of 12,850. So this is my value of supply for section 15, subsection 2, computation of GST thereupon. Let me know if you have any doubts on this example, what we have discussed. Kaushik says, point number 5, included if in contract. Okay. I think you're asking on the basis of this example number 1, Kaushiki. In example number 1, for a moment, if we assume 45,000 is included in contract, Then value of supply, I'll also add this 45,000. I repeat my explanation. In example number 1, 45,000 is in the scope of CHA. Then I'll not call as a pure agent. Rather, that will be taken into consideration for value of supply. This is your answer to your question, Kaushiki. Then next question. Balaji is asking this question. Sir, in example number 1, why hotel and travel expenses needs to be taken? Okay, I'll come back to example number 1. Balaji, hotel, travel, food, miscellaneous. As per your provisions of 15 subsection 2, look at this slide carefully. This slide says that any incidental expenses that forms part of my value of supply. For this reason, Balaji, I've added my hotel expenses to value of supply. So this is the answer to your question, Balaji. Next question. Can't we charge 12% rate on late fee? Yeah, Kaushiki, as I explained, since this is an independent supply, like I don't know whether the customer will make the payment, does not make the payment. It is not forming part of my original supply. For that reason, because this is separate transaction, which is an incident taking place, I'll charge 18%. Dhruti is asking this question. In exam, we have to show value of supply for late fee separately. Answer is yes, Dhruti. Very valid question. Very valid question. Like Dhruti is asking, when you are doing your answer in examination, please show the value of supply for late fee separately. Also, computation of GST, please do it separately in your examination. Other than this, I don't have any questions in my question window. Let me come back to my presentation. Now, so we will quickly run through, 15 subsection 2, value of supply to include any tax, duty, fee or a charge other than SGST, CGST. So this is my first inclusion. Second inclusion, any amount that is liable to be paid by the supplier in relation to the supply, but which was incurred by the recipient. So the responsibility of supplier, like first example, you remember this Amma Ashrama. In case of this Amma Ashrama, the Ashrama says, the trust says, you don't pay to this civil engineer or you don't pay the architect fee. Assuming for a moment 10 lakhs is the architect fee, I will pay to the architect directly. So this 15 subsection 2 says any obligation of the supplier paid by the recipient that needs to be added back. Now, I have given one example for getting a better clarity. For a moment, you imagine a factory which is into manufacturing activity. Generally, the factories are located far away from the vicinity of the city. A factory which is located 60 kilometers away from the city. Employees cannot travel on their own personal means. A vehicle is arranged for the purpose of transportation. And take example of this Delhi, Haryana, Uttar Pradesh. We call this as NCR region. Most of the employees travel on a daily basis from Haryana to Delhi, from Haryana to Uttar Pradesh, or from Uttar Pradesh to Haryana. And there are few factories which are on border, from Gurugram to Delhi, Noida, or to this other places. So there are places which are there in the border. For a moment, the factory is in Haryana. Employees have to travel from Uttar Pradesh to Haryana. So this transporter who flies between these two states, they say to the factory. For a moment, let's take Maruti as a manufacturer. Maruti engages a service provider called Praveen Transporters. Praveen Transporter says, sir, I have a road permit in the state of Haryana. Also, I have to take a road permit in the state of Uttar Pradesh. Because of your requirement, I'm taking a road permit in Uttar Pradesh. And the cost of road permit is, say, 1 lakh rupees. Also, like both Uttar Pradesh and Haryana government, they have something called vehicle fitment test. Every 3 years, they charge something called 3 lakh rupees. So here, the service provider says that, look, I will provide passenger transport services. As a part of this contract for employee transportation, I pay various government fees, maybe clean energy tax, maybe vehicle permit tax, maybe toll charges. These are all collected by the various state authorities. Should I need to add these services for the purpose of value of supply? Answer is definitely a big yes. Valuation 15 subsection 2, 15 subsection 2. They say any taxes other than SGST, CGST, IGST should be added. Incidental ancillary expenses which are charged by the supplier, anytime which are incurred by the supplier, have to be added. Money recovered as interest, late fee, penalty, or delayed payment, which is forming part of my consideration. Last but not the least, the fifth element, subsidy directly connected to sale of this particular material, other than subsidy given by central government, state government. Clear? So these are the principles which are governed under section 15, subsection 2. Now, this is just a recap of all our discussion. There are Panchasutras, we say, taxes, duties forming part of my value of supply, expenses, incidental or ancillary to be included, expenses on behalf of supplier which are made by the recipient, any money recovered by way of interest, late fee or penalty, subsidy. Why I'm stressing so much? Examination out of 5 marks, 2 marks adjustment definitely is going to be tested on this particular slide. Then we had this concept called pure agent. We are at 7:31. We will have a break for 9 minutes. 7:40, we will resume back and we will discuss once again. Students, we will resume back at 7:40. Welcome back. Let's continue with our discussion. There are a couple of doubts in relation to the topic we were talking. I'll share the Excel file. There's a question from Shyam Kumar. Shyam is asking, so value of supply is on invoice basis or it includes late fee also in our example. Shyam, value of supply is on invoice basis. However, in the example what we have discussed here, Shyam, there was a explanation or there was an assumption that, are you able to see my Excel file? Yeah. Okay. So here in this example, Shyam, this late fee is on account of delay in payment beyond 30 days. So when I raise an invoice, I have impression that the customer is going to make the payment. So when I raise an invoice, definitely that 12,850 will not be there in question itself. After a period of 30 days, I will write a letter to this supplier customer that, look, I gave 30 days. You have violated this 30 days now. So kindly pay back the 1% late fee, which we have agreed upon. That's how this comes as a different supply in relation to the original supply. And as per section 12 or 13, 12 for goods, 13 for services, the day when I receive money, that shall be my time of supply. So this is an independent activity. Hope this is clear, Shyam. Then Kaushik is asking this question, duties and taxes need to be directly connected to supply. Do you have any indirect connection, Kaushiki? Like whenever we talk about duties and taxes, I gave example of manpower contract, security agency. Security agencies pays this EPF, ESI, which is part of the supply. I gave second example of this transportation, where I have to pay entry tax or vehicle fitment tax or green cess or toll tax. All this again forming part of the main supply. So maybe a direct or indirect, however, any money paid on account of duties and taxes, that should be taken into consideration, Kaushik. Right? Now, apart from this, there are no other questions. So let's move on further with our discussion. So the next point of topic is pure agent. So pure agent, I gave an example saying that a person who is an agent, we have discussed the definition. Here, Rule 33 says that any person who enters into a contract with the recipient, saying that, look, I'm going to enter into a contract as a pure agent. For what? To incur expenditure or cost. To incur expenditure or cost. So this expenditure or cost is on account of service recipient. Is on account of service recipient in the course of supply of goods or services or both. So here, pure agent is a gentleman who is entering into a contract saying that, look, I'm going to incur an expenditure. I'm going to incur a cost. So this expenditure or cost, I gave an example of customs duty. When the agent, CHA, pays the customs duty, he says, look, I'm going to incur the expenditure on your behalf, the cost on your behalf. This agent neither intends to hold nor holds any title to such goods or services. There is something called title. So when the payment is made, this whatever cost or expenditure I'm saying, this cost or expenditure is resulting in a title. This resultant of title, I don't want to hold. It is on your account. Example. When I pay the customs duty, I get the ownership of goods. When I pay customs duty, the person who makes the payment of customs duty, the person who files bill of entry, that person shall be called as importer. So here, mere payment of customs duty, I as a pure agent does not get the title to the goods. Similarly, if I have received the transportation services, I don't get the title to the service as a recipient. does not use for his own interest. So whatever I'm incurring here, this money is not in my interest. This is on account of recipient. These goods and services which are rendered, which are received, this is on account of the recipient, not in my capacity, not in my capacity as a pure agent. Receives only actual amount. This is only actual amount incurred. He spends 2,50,000 to pay customs duty, gets back reimbursement of 2.5 lakh. Not any penny extra, not any penny lesser. So this rule 33 says that, look, I'm going to examine you on the basis of these four mechanisms. One, you have spent the money. Two, you're not going to hold the title to those goods. Three, it is not your own interest. Four, I'm going to receive exactly the same amount. When you have satisfied all these conditions, you fit into the definition called pure agent. Then, this rule 33 says that when you have satisfied all those three conditions, in relation to value of supply of services, in relation to value of supply of services, I exclude this value. So the expenditure incurred by a pure agent, expenditure or cost incurred by a pure agent as a supplier, as a pure agent, shall be excluded from the value of supply. So if you remember example number one, excluded transportation, I have excluded customs duty. If all the following conditions are satisfied, condition number one, what is that? Supplier acts as a pure agent of the recipient when he makes the payment to third party. When he makes a payment to third party. Now, what was the first condition? Making a payment to third party. Remember example number one, a chartered accountant filing this MGT form MGT 5. Now, ROC, when ROC receives 300 rupees, they know that this is received on account of this XYZ Private Limited. Though the chartered accountant, Siddharthi or Kaushiki or Sham makes the payment of the 300 to the ROC, ROC knows that this is received on behalf of this company. So, the pure agent, when he makes the payment, he says that, look, on account of my recipient, I make this payment. The payment made, condition number two. The payment made by the pure agent on behalf of the recipient of supply has been separately indicated in the invoice by that pure agent. So he says, professional fee rupees 5,000. This reimbursement of ROC fee rupees 300 rupees. So here, when I charge to the client, I have indicated 300 rupees separately. These are the requirements. Moving on, third condition. The supply is procured by the pure agent from the third party as a pure agent of the recipient are in addition to the main services. They say that your professional fee of 5,000 and this rupees 300, both are different. Please charge GST on 5,000, not on 300 rupees. Now, I'll come to my Excel file to give little more clarity. Most of the time, rule 33, pure agent concept. I'll say service of stock audit. Service of stock audit. Service, I'll say description of service. Amount, position, and also serial number. So I'm examining this rule 33 for one example called services rendered by a chartered accountant for stock audit. Stock audit fees. Say my stock audit fees is 15,000. Number two. Say there is something called weighment, calibration, charges. Say some 2,800. Transportation expense. Say some 3,200. Then hotel accommodation. Or instead of hotel accommodation, also let me say other professional fees. Some 2,000. Now, stock audit fees. This is a main engagement. I, as a chartered accountant, when I do the stock audit, I will not be calling this as a pure agent. I'll say not a pure agent. Weighment calibration charges. Now, what we have done in the say, we will do physical verification of stock. So there is a oil drum, or there are few items which needs to be done as a weighment. Like for a moment, salt. Like salt is one case where when you visit this production of salt, these are near to the coastal area, and when you visit this place, huge piles of bags will be there for stock verification purpose. If the client says, sir, every bag has 100 kgs, you wanted to test whether this bag really has 100 kgs or not, you will ask for a service provider. So there is a truck which comes, you'll ask the client to load, say, 100 bags onto the truck. You'll go along with the truck to the weighment bridge. You will get the weighment done for 100 bags. And the weighment bridge person charges 2,800. When I pay this 2,800 to the payment bridge, I'll say, buyer, please raise a bill on this XYZ Private Limited, where the service provider knows this is a service for that company. And I am paying 2,800, I'm claiming back same 2,800. So I'll say it's a pure agent. Now, what is happening here? I'm not holding title to this weighment charges. I'm claiming actuals. Even the service provider knows that this weighment is done for this XYZ Private Limited. Third, transportation expenses. I'll say transportation expense, also hotel stay. Now, I may travel by bus, or my juniors travel by bus, train, and also auto, and they stay in a hotel. When I buy a ticket, I'll buy in the name of my junior. When I stay in a hotel, my junior's Aadhaar card or PAN card will be given as an ID proof. So those are all individual. I cannot name the company. So I cannot say this is a pure agent. I'll say not a pure agent. Other professional fee, I tell to this client saying that, look, part of this professional fee, I need some expert who does this verification, which you have to pay directly to them. So this is not in relation to my stock audit. This is requirement by, say, a bank or any other agency who have appointed me. So when I pay directly, or client makes the payment directly, not forming part of my stock audit. So I'll say pure agent. Now here, value of supply. Rule 33, I'll say 15,000 will be my professional fee. I'll not take payment charges. Transportation and expenses is in relation to my service provided. So my value of supply is going to be 18,200. Rest is on account of pure agent. I'll not consider for my value of supply. So this is your answer. Let me see if there are any doubts in relation to Rule 33. Kaushik is asking this example. Vehicle license for UP. If there is any permit fee to be taken in Uttar Pradesh, it is on account of services. Here, look at the negotiation, Kaushik. Service provider says, because your employees have to be picked up from Uttar Pradesh, I'm paying this entry permit. So you have to pay me for that. So if it is a contractual terms, then by virtue of 15.2, it gets added to your transaction value. Great. There are no other dots. Let me come back quickly to other topics. Valuation. I have discussed this example. Now, discount. As I've said, my valuation discount is something which need not be included for value of supply. Now, when you talk about discount, there is something called trade discount. Please write down in your working notes, trade discount. What is a trade discount? A discount which is printed on the face of an invoice. Discount printed on the face of invoice at the time of supply. So as per this section 15 subsection 3, trade discount is excluded. Post supply discount, where agreement exists prior to such supply. So here my section 15 says that when you are making a supply, first, if there is a discount called trade discount, which is a discount printed on the face of the invoice. How does it look like? Say value of machinery, say 12,50,000, discount 5%. This into 5%. Total value of supply. So here, any discount printed on the face of the invoice, I call that as a trade discount. Any discount mentioned on an invoice, I call as a trade discount. That is excluded for deriving my value of supply. Next is your second element called post-supply discount. Post-supply discount. Now here, I'll give an example. Say, I'll give a laminate sheets supplier, manufacturer. Say, Sri Sham Plywoods. Now here, this manufacturer called Sri Sham Plywoods mentions to their dealers, saying that there will be a volume discount, volume discount in terms of quantity, value discount, and special discount. This is on account of say some what you call clearance. See, so here this manufacturer Shisham Plywoods to increase their business. Now, most of you, like, see, when we are studying for this professional course called CA, my advice would be, while studying these concepts, think like a businessman, think like a marketing executive, how the business operates, what are the requirements of a business. Now, this manufacturer, to increase his business, he has to come with innovative ideas. He'll say, look, if you purchase 10,000 sheets in every month, I'll give you 3% discount. If you make a purchase of, say, 50 lakhs worth plywood in a month, I'll give you 5% discount. Or there is something called clearance sale. Means I have manufactured a few plywood. There are few damages. I wanted to give 40% discount if someone purchases in a month's time. there are like the seasonal clearances we say. Many occasions there is something called factory clearance sale. Why they give this factory clearance sale? There are some damages. There are some sort of instance where this is not a good material. So they wanted to discard. They wanted to throw away at best price possible. Brand is something which attracts that particular clearance sale, like Nike or Adidas. When Nike or Adidas comes with a clearance sale, because of the brand, even if there is a small damage, people will be interested to buy those material. So here, section 15, subsection 3 says, if there is agreement existing prior to that supply, then please exclude that discount from the value of supply. So if a discount is given post sale, then credit note with GST can be issued. For a moment. I'll say incidence value say first Jan 2022, sale of 1,000 sheets, say for rupees 28 lakh. GST at the rate of 12%. Let me capture this date separately. On 1st January, I have sold 1,000 sheets for 28 lakhs. So there is a condition saying that 3% discount for payment, cash payment, or I'll say payment in week's time. So when I sold the goods on 1st January, my week's time, that is on or before 8th January, the customer should make the payment. So on 6th Jan 2022, customer made 100% payment. Then the customer made entire payment of 31,36,000 on 6th January. So as per my contractual terms, discount of 3% on supply value into 3%. This 84,000 happens to be my discount entitled. So the customer is supposed to get discount of 84,000. Is that only 84,000? No. GST at the rate of 12%. Because the sheet says taxable at 12%, I'm going to give a discount of 12% into 12%. Sorry. So here, if you look at the seller's point of view, government is supposed to get 3,36,000 as GST. On account of discount, this amount is deducted, and 3,25,000 is the net tax government is to pay to government. The government is getting 3,25,920 rupees instead of 3,36,000. So why is this happening? Because there is a discount given. My valuation, section 15 says that please give a discount if at all, there was a condition on the date of sale. If this condition was not there on 1st January, then this discount is not tenable. So I'll write again here. They exist a contract on the date of sale for such discount of 3% payment. So I'm mentioning that the day when original supply happened, Between the seller and buyer, there has been a contract. On account of that contract, this discount has been passed on. Now, is this the only condition? Second condition is ITC to be reversed by the recipient. That means to say, in this example, students, Sri Ram Plywoods happen to be the seller. So when Sri Ram Plywoods have to say, pay 3,36,000 to the government, but he's actually paying 3,25,000. Government is saying that, look, Mrs. Sri Ram Plywoods, I'm going to give you a deduction of 10,800 on a condition that your customer has reversed the ITC to the tune of 10,800. When you raised invoice, your customer would have claimed ITC for 3,36,000. You ensure that the customer has reversed this ITC for 10,800. Then I'll give you a deduction of 10,000 and pay only 3,25,000 to me as a tax payment. Are you having any doubts so far? Discount examination, 1 mark by way of adjustment. Out of 4 marks you can expect. 15 subsection 2, 1 or 2 marks. Subsection 3, again 1 mark. There are no doubts. Let me come back to my presentation. Then, moving to valuation rules. So 15 subsection 4 says, look, the starting point, price is the sole consideration, and both the parties, supplier and recipient, are not related parties. If any of these two conditions fail, then the valuation says that, don't worry, you go to these valuation rules. As of today, we have 11 valuation rules, and also subsection 5 says that I, as a government, I will notify few goods or services on which what should be the value of supply. Now, to start with, there are total 11 rules notified as on today, Rule 27 till Rule 35. I'll make you run through all these rules one by one for a detailed understanding. Starting point, Rule 27. Why Rule 27 came into picture? Because there is a failure of Section 15, subsection 1. What was that? Price is the sole consideration or related party transaction. I gave example of this mixie grinder. Assuming for a moment the market value of mixie, this new mixer grinder is 20,000. This shop owner says that if you give an old mixie grinder, I'll give you a concession of 3,500. So here, when price is not the sole consideration, I get money of 16,500 in exchange 3,500. Then I shall not go for valuation as per section 15 subsection 1. Rather, I come to this valuation rule 27. So rule 27 says that when you don't have price as per the valuation, look upon something called open market value. So how do I get open market value? Look at the sales transaction. In a case, if an independent customer comes to purchase that goods, like this example mixer grinder, if I sell this mixer grinder for 30,000, if that is the open market value, please adopt that as an open market value. So what if the open market value is not available? Then take into consideration this. In the previous example, I'll come back to my previous line. In this slide, my open market value happens to be 20,000. My money is 16,500. So the rule 27 says that first you look at your open market value. This is my open market value. If this is available, please go with that. So what if this is not available? Then please take 16,500. To this, add the value which is exchanged by this particular supplier. If the open market is not available, then they say sum total of consideration in money plus any such furtherance amount in money any such further amount in money equivalent to the consideration not in money. So here, this value of that old mixer grinder is what I'm going to add back. So rule 27 says that please take that 16,500 physical cash and the exchange of old price. So what if this is not available? Then they say, don't worry, go for like, kind, and quality. Now, this rule 27, this clause C, generally in relation to import transactions or when I go for provisional assessment. Under GST law, there is a concept called provisional assessment where I don't know how to determine the value. Then the GST officer is going to apply rule 27 for this valuation. So here, clause C says that look at your like, kind, like quality. Like example, so you have mobile shop. When you go to this mobile shop, you have basic features like 8 GB RAM and say hard disk of say 256 GB. Features, camera is there. Probably like storage capacity. Then your battery capacity. Compare the features. Then you have this Samsung compared with say Xiaomi. So when you compare this Xiaomi, where you don't have open market value, I derive based on the like, kind, and quality of Samsung. That's called principle number 3. Then, so what if I don't have a competitor like for Xiaomi? I don't have Samsung. I don't have LG or any other competitor. Then don't worry. Go as per Rule 30 or Rule 31. Rule 30 is cost based. This is cost based, like cost of goods sold or manufacture, cost of procurement, cost of services. Rule 31 is the best judgment. Like, this when we officer doesn't have a mechanism, they'll take expert of a cost accountant or a chartered accountant, best judgment principle as per Rule 31. So Rule 27, in attention, it says that look at your open market value. If this is available, go with open market value. Say this is not available, then money in cash is money equivalent not in cash. So this is also failure because this money not in cash cannot be quantified for various reasons. Then go with something called like, kind, or quality. So there is no like, kind, or quality available. Then nothing to worry. Go with Rule 30 based on your cost of procurement or best judgment available. This is my summary of Rule 27. Examination, don't worry. You're not going to be tested with this Rule 27. Application of Rule 27 in practical scenario, you're going to be tested. Now, this example may be tested for 1 mark in your examination. Like an example, say, I'll take this example. This is very good example. Laptop is supplied for 40,000 rupees along with a barter of a printer that is manufactured by the recipient. Value of printer known at the time of supply is 4,000 rupees. But the open market value of laptop is not known. Then the value of supply shall be 44,000 rupees. What they are saying is that seller is selling a laptop. Customer is giving a barter system. You sell me a laptop. I, as a buyer, I'll give you a printer. This laptop does not have open market value. So Rule 27 says that this 40,000 in cash plus this 4,000 happens to be a market value of this exchange in monetary value. 40 plus 4, 44,000 happens to be the value in supply, applying Rule 27. Examination. These kind of examples will be tested for you to derive value of supply. Any questions so far? Chirag is asking this question. Rule 27, clause C. We have to take like, kind, and quality of goods present with dealer. May not be with the dealer. At times, Chirag, dealer has to establish what is the market available for this competitive product. Like most of this customs or transfer pricing, we will compare with the independent market supply. So not always possible the like, kind, and quality is available with the dealer. Like, kind, and quality made by some other competitor. In general, the dealer, whatever products he is having, he has to prove this is a like, kind, and quality which is made available. And if you look at theoretically, it is answer is look at the dealer who can establish the like, kind, and quality. And practically, say, where do we apply Rule 27? Most of the cases, your assessment, like no provisional assessment, where the supplier is not in a position to derive the value of supply. When he files an application with the commissioner, then commissioner applies Rule 27 to derive the value of supply. Yeah. Hope I have answered your question, Chirag. Rule 28, I'll come with an example to make you understand this related party transaction. Related party transaction other than supply through agent. Now, say transaction value GST rate. Supply from Tamil Nadu to independent customer. Say 32,50,000. GST rate and GST amount. Say GST rate is 18%. And GST amount happens to be 5,85,000. Scenario number 2. Stock transfer to UP branch for further supply. I'll say 18,52,000. Say 18% only, and GST is this much. Now, if you happen to be a finance manager, you wanted to do this fund flow management. If I sell the product to an independent customer, I have to collect 5,85,000. If I have to do a stock transfer, now the sale from the branch may happen in the same month, may happen after a point in time. I'm selling to my branch at much less than the open market value. Why? Probably to save my GST. I'll give a third scenario. Stock transfer to say Delhi branch for self-consumption, or I'll say for captive consumption. Say 5,22,000, 5,20,000. Now, when you look at these two transactions, these are alarming transactions. Why? The government is not getting their revenue. Government is not getting their revenue. Instead of getting 5 lakh in scenario 2, the government is getting 3,33,000. In scenario 3, it is only 93,600. Now, this is where the Rule 28 comes into picture, where they say, look, wherever there is a related party transaction, I will set aside your transaction value. First, I'll check your open market value. Please adopt your open market value. If it is available, like Chirag mentioned, I'll go with your open market value. So what if open market value is not available? Like, kind, or quality? Or scenario 3, say 90% of supply value if it is for further supply. Now, I'm just examining the possible ways where the government can protect their interest. The government will say, Praveen, you're doing a stock transfer. I'll not accept scenario 2. I'll not accept scenario 3. I'll go with only scenario 1. That is called open market value. Scenario number 2. So what if this, I'm not selling the same product, then where open market value is not available, like kind quality. Scenario number 3, I may think, instead of doing this way, what if this UP branch, I'll say further supply. This UP branch is selling this product for 35 lakh to the independent customer. So from Tamil Nadu, it is sold for 18.52 lakh. But from Uttar Pradesh, it is sold to independent customer for 35 lakhs. Similarly, in Delhi, after some captive consumption, this is sold for 42 lakh 50,000. So here government may say, look, instead of accepting 18.52 lakh, what if I accept on this 90% supply value? On this, I accept 90% as a supply value. I'm just examining the various permutations and combinations. So this is how policy is framed by the government. This is how law is framed by the government. Like Chanakya, when you have to look at the taxman to frame the taxes, like every chartered accountant who's an expert on fund flow management, they look at these options to save their internal fund flow. Now, when company tries to save, government comes with these sort of modus operandi to protect their interest. Now, coming back to the theory, Rule 28. Rule 28 says that, look, whenever there is a supply stock transfer, where the price is influenced, whenever the price is affected because of relationship, first I'll check what is your open market value. If your open market value is not available, I'll go for like, kind, or quality. If A or B is not available, then I'll go with something called Rule 30 or Rule 31. Now, so what if this Rule 30 or 31 is also not available? Then, like 30, 31 is the ultimate solution. 30, 31 is the ultimate solution. There's important aspect called, provision to Rule 28. This is going to defeat the entire purpose of Rule 28. This provision is going to defeat the purpose of entire Rule 28. What it says, look, where this is the point. This provision says there is a recipient. This recipient is eligible for full input tax credit. Now, the government theory, what I have given in the Excel file, for a moment, if it has to be admitted, this provision says that, look at the recipient, that means the branch. If the branch is eligible for full input tax credit, then value declared in the invoice shall be deeming fiction to be the open market value. Now, this is a savior of entire valuation under Rule 28. So this Rule 28 says that, look, I admit that your value or relationship has influenced the transaction value. In case, if your recipient is in a position to take input tax credit, I'm not going to question your transaction value. Your value declared in the invoice shall be accepted on the face of it. I'll come to an Excel to explain this scenario. So condition, if recipient, that is branch or other person, is or I'll say can avail ITC. Transaction value is the value as per invoice. The government cannot question. The government cannot question. Now, I'll give an example where this may be a failure. Take example of TAFE. TAFE is into manufacture of, say, tractors. For a moment, this is just academical discussion purpose, students. TAFE has got manufacturing plants in Punjab and Tamil Nadu. They have branch in, say, Karnataka, Kerala, and Maharashtra. Now, taxable, exempted. Tractors are taxable for a moment at the rate of 12%. This is just theoretical discussion. Say taxable at 12%. Now, assuming TAFE has a policy that these tractors are exempted on a conditional basis, taxable on regular basis. Now, I'm just giving a hypothetical example for where this Rule 28 is going to be a failure. For a moment, the law says that it is taxable on general basis. It is exempted on a conditional basis. Say this tractor is sold to, say, this IISc, Indian Institute of Science, or IIT, for scientific research purpose. There is one institute in Andhra Pradesh, Acharya Rangarao University. This Acharya Ranga University is into research and development of agriculture. So the government says that if you sell this tractor to any of those research organizations, you need not charge GST. So Karnataka and Maharashtra are taking making a sales of taxable products. Kerala alone is a branch where they wanted to sell all these exempted products. So for a moment, IIT Kharagpur gets an order on TAFE saying that, look, I need 10 tractors for particular scientific research purpose. Or this research university places an order on TAFE saying that I need 5 tractors. So TAFE, as a policy decision, they will say all these exempted supply will be undertaken only from Kerala. So here, Rule 28 is not affected. That means to say, if TAFE is adopting 18,52,000 or 5,22,000 to the supplies made to Karnataka and Maharashtra, whatever invoice value is there, because these states are making a further supply where they can take the input tax credit, the valuation will not be questioned. But in case of Kerala, Rule 28 has to be adopted, has to be tested. That means in case of Kerala, open market value or your like kind of quality or 90% of the value of supply, this will be put for test. This is where Rule 28 comes into picture. Hope this is clear, students. Next is your Rule 29. Let me just see if there are any questions. Kaushik is asking this question, 90% theory apply in reality, or this is just an example? This is there as a principle in Rule 28, Kaushiki. As I said, in provisional assessment case, probably commissioner may adopt this principle. In reality, we don't go with this principle. This is just most of the cases for theory purpose. Yeah. Next. Rule 29, in case of supplies made through a dealer. Now, this L&T case, L&T supplies a bag of cement to dealer, saying that please sell the cement bag at rupees 600 rupees per bag, which includes all taxes. Now, when the dealer is, for a moment, 600 rupees is the selling price. When the dealer is selling at 600 rupees, what is the value as per Rule 29? Rule 29 says that go with open market value. Go with open market value or 90% of the price charged by the agent to the independent customer. Very, very simple rule. So this L&T Cements, not LNC, this India Cements or Ultratech, when they supply cement to a dealer, this Rule 29 says, look, I give you two choices. Choice number one, this product, what is the open market value? Go as per open market value. Or whatever is the selling price at the agent, 90% of that will be the transaction value. In this example, if the dealer sells at 600 rupees per bag, 90% of 600 happens to be 540 rupees. So Ultratech or India Cements, when they dispatch the cement bags on 540 rupees, they have to charge 28% to the dealer. This is my market value as per Rule 29. As per Rule 29. This Rule 29 gave an example, a fantastic example. This talks about groundnuts. For a moment, let's take example of a groundnut. A principal appoints a dealer. Dealer can undertake a sale of groundnuts to principal A to principal B. For a moment, this principal is supplying groundnuts to agent. And this agent, when he's supplying to independent customer for rupees 5,000. Like whatever groundnuts are supplied by principal, this is ultimately sold to a customer for rupees 5,000 per quintal. And this particular dealer purchased from an independent supplier, where this independent supplier is giving for a price of rupees 4,550. Now this 4,550 happens to be a open market value. So here 5,000 is a sale value to the end customer. That is dealer selling to the end customer, or 4,550 another principal selling to this agent. So the law says choice is to you. Either 90% of 5,000, that is 4,500, or 4,550, which happens to be a open market value. Open market value. Choice is to you. You can adopt either of these two as per Rule 29. This is my Rule 29. So here Rule 29, just summary again. Sorry. Rule 29, I'll go with open market value or 90% of further supply value. So what if I don't have open market value? So what if my agent, I don't have a control? Like example, practically this Ultratech or this India Cements. The cement has no MRP for a moment, or the product has no MRP. So I don't know what is the selling price of my agent. Then apply Rule 30 or Rule 31. This is what they say. Not to have a litigation, the thumb rule, selling price of the dealer is fixed by the principal. So they say you cannot sell less than or more than this price. Where I'll pay you commission separately. Whereby 90% of that will be adopted by the seller. Coming to Rule 30. Rule 30 is on the basis of cost. Where they say, if there is open market value, we will go as per open market value. If not, again a thumb rule, 90% of the supply, sorry. This is for Rule 29. This is just summary of Rule 29. Now, coming to Rule 30. Rule 30 is very simple. Look, you don't have open market value. You don't have like kind of quality. This Rule 30 says, let me go with 110%. 110% of your cost of production. We call as cost of production or cost of manufacture. This is derived from your cost sheet. based on your cost sheet. When I prepare my cost sheet, whatever is your cost of production, on that I load 10%. I will load 10%. I don't know how many of you have done your cost audit. We have something called CAS, cost audit standards. CAS 4 deals with your costing. So based on CAS 4, I load 10%. That will be the price as per Rule 30. So what if I don't manufacture? Cost of acquisition. What is that you purchase? On that I loaded 10%. That is if you do a trading activity. If you are a manufacturer, I'll go with CAS 4. If you're not a manufacturer, what is your cost of acquisition? I load 10%. So what if I'm a service provider? Then I'll apply your cost sheet based on your provision of services. I load 10%. Very simple funda. Rule 31, very, very simple rule. On the basis of generally accepted accounting principles, professional cost accountant or chartered accountant, he will derive the variable means. Rule section 51, read with Rule 27 to Rule 30. I take all the GAN and then apply Rule 31. Rule 31. Now, this Rule 31 is in relation to your lottery ticket, in case of betting, in case of your horse race or gambling. So, in case of a lottery ticket, we have Kerala, Sikkim, very famous, where these two states, one of the main business by many of the dealers, you visit any of this tea shop, you have lottery tickets sold like your tea biscuit, chai biscuit. So in case of a lottery ticket, the value is the same. Whatever is the value of lottery ticket into 100 divided by 128. So whatever is the face value, if you sell for say 100 rupees, 100 into 100 by 128 is my value of supply. On that, 28% is my GST or a price notified by a state concern in case of lottery ticket. In case of a actionable claim like betting, gambling or horse race, 100% of the face value of a bet or amount paid to a totalizer. These are very rare. You might have seen in your internship days, horse race. Most of these people who do a betting on a horse, there is a person called totalizer. This totalizer has will collect money, saying that if you put a bet of 3,000 rupees on this particular horse, whoever has put a bet on this horse, all that money on this particular horse is called as a money on totalizer. On that, 28% happens to be the GST. So leaving the GST, whatever money is collected, whoever has put on that horse, who wins, they get that money as a betting fees. So in case of actionable claim, bet, etc., whatever is the money collected as a bet fee, that will be your transaction value. Now, Rule 32. This is a specific rule. Where they have come with a model where they say that in case of railway agent, a travel agent, booking of your A tickets. In case of an authorized dealer who is into business of buying and selling a local currency. In case of a voucher, what shall be the value? In case of a person who is dealing with sale of second-hand goods, Then last and final, in case of a insurance business. These 5 cases, they have come with a Rule 32. I'll come quickly one by one. First, I'll take an example of a travel agent. Rule 32, travel agent. The law says that in case of a domestic travel, 5% of the basic fare. Is the value of supply. In case of international travel, 10% of the basic fare, which is charged by the travel this agency, the travel authorities charged to the travel agent, shall be the value of supply. In these two cases, a value of supply shall be my 5% of the basic fare or 10% of the basic fare. Moving on, rule 32 for money exchange. Money exchange. Model 1, like gap between purchase and sale, or 1% of the supply of currency. That means to say, you have say RB, like first model, there is something called RBI rate. Now I'll put it here this way for ease of understanding. Say RBI rate, RBI reference rate, purchase, sale. RBI reference, say for dollar, 78 INR, 78 per dollar. So if I have to, as an authorized dealer, if I have to purchase dollars from someone, this dealer says, look, I'm going to purchase at 76. Now, why is that he's buying at 76? Because RBI rate is 78, I'll buy at 76. If I sell to someone at 78, I'll make a gap, profit of 2 rupees per dollar. So in case of purchase, the valuation says that, look at the reference rate, RBI rate, look at the purchase value. The gap between these two, that is going to be your value of supply. In case of sale, if this dealer is going to sell at say 80. Now, I'll put it here so that it's easy for you to understand. My RBI reference is 78 per dollar, but I'm selling at 80 per dollar. So if customer, like quantity and value, if $1,000 are purchased, 1,000 into 2 rupees per dollar is my transaction value. So this is going to be my value of supply. In second scenario, if I'm going to sell $450, I'll say $450 into per dollar, I'm going to make a profit of gain of 2 rupees. So 900 is going to be my value of supply. This is my model number 1. Scenario number 2, reference to RBI is not available. Reference to RBI rate is not available, where the authorized dealer gives, say, 10,000 sterling pounds for rupees, say 28,500. I'm just giving a hypothetical example, students. I'm just giving a hypothetical example. A customer walks into an authorized dealer where he wanted 10,000 sterling pounds. So what the authorized dealer has done, he has given he has taken from customer 28,500 and he has returned back 10,000 sterling pounds. There, my value of supply shall be 28,500 into 1%. This happens to be my value of supply. Very, very standard model. This is my model number 1, where the government says choice is up to you. RBI reference is there. This is the funda. If RBI reference is there, this is a funda. If RBI reference is not there, this is I do my valuation. Examination. Please expect one mark from this conversion in your value of supply computation. Then model number 2, where the valuation under rule 32 says that, look, if you don't want to get into this model, let me put it this way. For any conversion up to for 0 up to rupees 1 lakh, You have either rupees 250 or 1% of the value supplied. Like this model 2 says, don't look at the conversion rate. Rather, look at the customer. Customer has come to you purchase a foreign currency. Could be dollar, yen, or say sterling pound, or any other foreign currency. You have received from customer some 30,000 rupees. Then up to rupees 1 lakh, let me, up to rupees 1 lakh, minimum rupees 250 is going to be value of supply or 1% of the value supplied. For a moment, if 28,000 INR, 28,000 is received from the customer. So 28,000 into 1%, my value of supply shall be, I'm going to apply a formula. My formula is maximum of 250 or let me just refer to I cell I115 into 1%. I'll just change this to 28,000. And this I'll put a currency of where is the currency? Yeah. If my not 28,000, 2,800, 28,000. If the money exchange is up to 1 lakh, my value of supply, the provision says minimum 250 rupees or 1%. So here 1% of 28,000 happens to be 280 rupees. So what if the value is exceeding 1 lakh, that is above 1 lakh to rupees 10 lakh. Then they say up to 1 lakh, 1%. We know that rupees 1,000. Rupees 1,000 plus 0.5% of the value of supply. 0.5% of the value of supply. So here, assuming I am going to sell foreign currency up to 2,50,000, say 2,50,000, then my value of supply is going to be, for 1 lakh, I know 1,000. 1 lakh into 1% is 1,000 plus, I'm going to put the brackets, 2,50,000 minus 1 lakh is the first slab. This into 0.5%. 1,750 is going to be my value of supply. Examination. This conversion, this calculation is going to be tested for 1 mark. You have to remember the slab rates. You have to know how this calculation is going to be done. Then, scenario above 10 lakhs. Above 10 lakh, they say, now we know up to 10%, like 1,000 on 9 lakh, 0.5% happens to be 9 into 5, 45. It's going to be rupees 4,500. So 4,500 plus this 1,000, that is going to be rupees 5,500. 5,500 plus 0.1% of the value of supply, maximum of rupees 60,000. Maximum of rupees 60,000. So when customer comes to buy a foreign currency exceeding 10 lakhs for a moment, customer comes to buy 12 lakhs rupees. Let me apply this formatter. Yeah. So if the customer wants to buy 12 lakh foreign currency, now here for first 10 lakhs, 5,500 is going to be my value of supply. On the balance amount, I'm going to say 12 lakh minus 10 lakh into 0.1%. 5,700 is going to be my value of supply. So examination, this is going to be tested for 1 mark for calculation. Let me see if there are any questions. I'll come back to my presentation. Okay, so far so good. No questions. So I've explained this railway ticket. I've explained this sale of foreign currency. Now, second-hand goods and this voucher, redeemable voucher. Whenever the vouchers are supplied, what is the value of the voucher printed? Like, if I give a voucher to my student saying that if you have participated in the debate and you have won the debate, I'll give you a voucher of 1,000 rupees. So on 1,000, if I've given a voucher, value of supply is going to be 1,000. The value of goods exchanged. Now let me come to this second-hand goods fund. Second-hand goods. I'll give you an example of Maruti True Value. Maruti True Value is a business, is an entity where they are into buying and selling of used motor cars. Business of buying and selling old used motor vehicle. So here, Rule 32 says, value of supply shall be gap between sale price and purchase price. Ignore value of supply if there is a loss. So it says only when there is a profit, that profit will be considered as value of supply. So what if I have sold at loss? Then there is no value of supply. Means don't pay any GST. Conditions. This rule comes with a conditions. What is that? Conditions is this dealer should not avail ITC. So when they buy this vehicle, they should not claim any input tax credit on purchase of that particular vehicle. I'll give an example. Say, Mr. XYZ Limited sell their old motor vehicle, old car to Mrs. Maruti True Value for rupees 2,50,000 and GST say 12%. So here purchase price is 2,50,000 plus 12% on 2,50,000. It's coming to 2,80,000. So here they say if this entity XYZ Limited collects 30,000 as a GST from Maruti True Value, this dealer, he is registered in GST, should not claim ITC. This is the first condition. Second condition, there could be minor repairs for making such supply. Goods should not be altered. They are saying that when you are a dealer, you are into this business of buying and selling. Look, you can do a minor repair activities. Don't do major changes where altogether the goods change their position. You cannot buy a two-wheeler, make it to a three-wheeler. You cannot buy an auto, make it to a car. So generally they say when you buy a car, you can do polish. You can do replacement of worn out tires. You can do, if there is a paint which is peeled off, you can do a tinkering and get the paint. Minor alterations are permitted. Otherwise, no, I don't permit. This is my value of supply for old used motor vehicles. Then, in relation to insurance, I'll straight away come to the slide where they have given this insurance rates. Yeah. Now, in case of insurance, this is one slide you have to remember. I'll come by one. First, I'll come to this single premium called annuity policy. Annuity is a mechanism. Annuity is a mechanism where I buy a policy, I pay one single premium. That means I'll buy a policy for 5 lakhs, expecting returns over a period of 7 years. The insurer says, okay, I'll give you a life coverage of 5 lakhs. I'll also give you a returns of maybe 50% of 5 lakhs. That is 2.5 lakhs over a period of 5 years. In that case, my taxable value is going to be 10% of the single premium paid. This is in case of single premium. Second, a premium paid for a policy with dual benefits of risk coverage and investment. Where this, sorry, there is a premium collected from a customer where the premium is indication saying that this money is going to be put for so much of investments. This is savings which you're going to earn out of this money which you're going to invest. In that case, value invested on those investments will be reduced. The balance value I'll be charging GST. In general, like this is a case where we will come across most of the policies where policy is taken on year basis. Every year when I pay policy, first year 25% is my value of supply. Second year onwards, renewal. When I do second year onwards renewal, 12.5% is going to be my value of supply. Only for the first year, 25% of the premium is the value of supply. For the continuous second year thereon, 12.5% is going to be the value of supply. Rule 32, read with section 12, subsection 5. It's a policy decision of government. I cannot question. I have to go with this rates prescribed. The last element in the slide you can see where only risk coverage is there, where we call endowment policy, like life risk coverage is there. Those cases, whatever premium is there, that shall be your value of supply. Rule 32, sale of old used vehicles. I have explained this. Voucher, this is also covered. Kerala flood cess. This is there in 2019. This has a sunset clause in 2021. This will not be tested. Next, Rule 34. This Rule 34 is going to determine the value in case of conversion. Sham says like income tax rates we have to remember. Yes, Sham, there is no choice. We have to remember as per income tax rates. Now, wherever there is a foreign currency, import of goods or export of goods, how I will deal with my rate of exchange. So the Rule 34 says that wherever there is a foreign currency in relation to goods, please look at the customs rate notified by CBIC. As per CBIC, every month there is a notification released for customs. They say for dollar, for yen, for Japanese yen or Singapore dollar or euro, various currencies, customs comes with a notification. So they say for the purpose of imports, for the purpose of exports, when you want to determine the value of supply, value has to be adopted as per the customs rate. So what I have to do in case of services? In case of services, whatever my policy adopted as per generally accepted accounting principles, that shall be your exchange rate. So what I have to do for this value of supply? Generally, we have this authorized dealers. That means we will look at the authorized dealer like State Bank of India, Indian Bank, or ICICI Bank. So when we want to buy foreign currency, generally we will call the banker and say, what is today's conversion rate? I'll wait for a good day to lock in and then buy the foreign currency. Why? When I look at royalty, like assuming I have to pay 1 lakh USD to my parent company, what shall be my INR for the purpose of payment of GST? The rate given by authorized dealer, the day you account for the transaction, the day given by authorized dealer, which is generally accepted for your books purpose, that shall be my value of supply, conversion rate. Then last but not the least, Rule 35, where this rule says that we have applied this rule in case of this example where interest is collected from the customer, late fee, inclusive basis. You remember into we had this example. Let me just come to that Excel file. Yeah, you remember this 12,850 is collected as a late fee. This rule 35 says that when the value of supply is including taxes, that means I'm not collected GST separately from my customer, then this rule 35 says that it is presumed that your IGST, CGST, SGST is my inclusive. So if 18% is the rate of GST, the value divided by denominator is going to be 118. This is how Rule 35 has been taken into consideration. This is the last slide of my presentation. Before we wind up, students, please bear with me for another 5 minutes. I'm going to take through MCQ and then we will wind up. Examination point of view and theory point of view, please understand the business. Like I gave example of subsidy, how the money comes from a Telangana state with respect to the installation of solar panels. Look at the books where I keep a track for the goods exchanged. Look at the business model of this goldsmith, Karigari, how the jewelry is extended to make the profits. Understand the business models and based on the suitable, like Rule 28. Rule 28, the proviso says if the supply is between a related party where the recipient claim ITC, give an advice how you can reduce the litigation and go with the open market value. Last but not the least, presentation. How we present this information in my statutory returns. Let me come back to my MCQ. Hope you are able to see my Word file. We'll solve this MCQ and then we'll wind up for today's session. First question, transaction value shall consist of consideration. Remember the first definition, the first slide, I moved from value to a definition called consideration. So when I talk about consideration, transaction value, it shall have consideration. Answer, yes. Point number 2, value of free supplies given by the recipient to enable the supply. Remember your section 15, subsection 2, obligation of supplier met by the recipient. Like remember this Amma Trust case where the cement required for the supply was given by one of their donor called India Cements. So even this, by applying principles of subsection 2, forms part of my transaction value. I'll say this is also yes. Subsidy, if not provided by state government or central government. So I gave an example of a software company. If a laptop is sold by a shop owner, 50% is given by the software company. Like I happen to be a student, I go to the shop, I pay 25,000. Balance 25,000 is received from the software company. For the purpose of levy of GST, even that subsidy needs to be considered. So considering all this explanation, answer for this, A, all of the above. Then, second question, transaction value is not acceptable if supplier and recipient are related by way of investment in equity by the recipient of the business of supplier up to 25%. So when you have looked at this explanation to section 15, there is a related party transaction. If one person is investing in shares, voting rights of another, then they say, if the value of investment is up to 25%, I cannot accept a transaction value. Answer, true or false? Answer is false. Why it is false? My section 15 says that 25% or above. It is not up to 25%. In this question, true or false, I say investment up to 25%. If the investment is 25% or above, then I will not accept my transaction value. Question number 3. Discount shall not form part of supply. Remember subsection 3, I gave example of discount. Discount shall not form part of supply when discount is mentioned on the tax invoice. This is called trade discount. If a discount is mentioned on tax invoice, answer is yes. I'll give a reduction for that. Point number B. Discount issued after the supply in relation to an agreement entered prior to making such supply. You remember cash discount we gave. So even this is a permissible case. Only A? No, because B is also permissible. Answer is both A and B. This is my answer for question number 3. Question number 4. A value of a supply of a premium collected in relation to annuity other than wholly risk coverage. This slab you have to remember. I'll give an answer. This is the answer. I'll share and I'll leave it to you as a practice at a later point in time. Question number 5. Value of supply for a dealer engaged in buying and selling of second-hand goods. You remember Rule 32, buying and selling of second-hand goods. What is the question? Value of a supplier for a dealer engaged in supply of second-hand goods shall be on the margin between selling and buying only if. So I have to go with this Rule 32 only if what? Question number 1. Point number A. Input tax credit has not been availed by the supplier of such goods to a dealer. Now here, if you remember this example of Maruti True Value. Here, what is the condition? Yeah. So here, input tax credit, ITC, should not be availed by Mrs. Maruti True Value. There is no requirement of Mrs. XYZ Limited. Now, coming back to question. So, here the MCQ says ITC should not be availed by the seller of such goods to the dealer. Answer is no. Seller may take ITC, may not take ITC. It is not relevant. So, this is incorrect. Point number 2. Depreciation should not be claimed on such goods. Now, when a dealer is buying and selling, where is the question of depreciation? This is just to deceive your attention, take away your attention. So depreciation is irrelevant. This is also false. Only exempted goods shall be considered for the above mechanism. Now, please understand, exempted goods, I need not worry about GST. Only taxable goods are relevant for GST. So the answer will be none of the above. None of these are relevant for my value of supply. Last question. Value of supply shall not be transaction value if value of supply shall not be a transaction value if price is the sole consideration. Now, this is they're asking a negative question. If price is the sole consideration, section 15, I will go with price. So it is affirmative. Supply and recipient are related. However, such relationship has not influenced. That means it is an open market value. Consideration is not wholly in money, and such amount is not in money, not readily quantifiable, or none of the above. So here, if price is a sole consideration, and though it is a related party, if it is at market value, A and B are affirmative in positive. So A and B are not relevant to the question. C, consideration is not wholly in money, and the balance portion is not readily quantifiable. So if balance portion, like example, I sell a TV and I'll say, whatever future you gain out of a lottery ticket, I'll take 10% of that as a consideration. So answer would be this clause C. I'll not go as per section 15 transaction value. Rather, I'll go to something called rule 27 to rule 30 or 31 to derive my value of supply. So students, these are the MCQs connected with today's learning. I hope you have enjoyed today's discussion. As I said, this is a marathon. End of today's discussion. Please go back, visit the MCQs before this topic gets evaporated from your mind. Come prepared, and any questions I'm not answered on valuation, the next session which you are going to handle, I'll clarify all your doubts. Till then, good night, goodbye.